Hey photographers, whether you're just getting started or a couple years into your business, you've probably invested in a good chunk of change into your gear. Am I right? This could be things like cameras, lenses, lights. It all adds up. But here's the good news. That gear can actually help you save money on your taxes. Yep, you heard that right. Today, we are diving into depreciation, the secret weapon photographers can use to lower their tax bill. Stick with me because by the end of this video, you're going to know how to turn all that gear into tax savings, keeping more of your hard-earned cash, and making smarter financial decisions for your photography business. Hi, my name's Heather, and I'm a wedding and senior photographer based in PA. On this channel, I love educating other photographers about taxes and finances as a small business owner, and I'm so excited you're here. In this video, I'm going to break down what depreciation is and how it can be beneficial for tax purposes. This video is brought to you by my free masterclass, Maximizing Your Tax Deductions as a Photographer. In this masterclass, I'll walk you through the 5 most common tax deductions that photographers miss when preparing for tax season. I'll give you actionable tips so you can maximize your deductions and keep more of your hard-earned income. You can find a link to this class in the show notes below. Now, let's jump into understanding depreciation. So, what exactly is depreciation? In a nutshell, it's how the IRS lets you write off the cost of expensive equipment like cameras or lenses or computers over time rather than all at once. This can be a huge tax benefit for you as a small business owner because it reduces your taxable income over several years. Let me show you how it works. So depreciation reflects the fact that your equipment loses value over time as it gets older, but you're using it for more than just 1 year. For example, let's say you buy a new camera for $2,000. You have the option with depreciation to claim a portion of that cost every year that you'll be using, which spreads out that tax benefit instead of taking it all in 1 year, that year that you purchased it. So, what kinds of things can you depreciate in your photography business? Here's just a quick rundown of some of them. It can be things like your cameras, your lenses you use, maybe computers or monitors you have in your office, lighting equipment that you use. Basically, it's any big ticket item that you'll use in your business for more than 1 year are eligible for depreciation. Now, there are a few different ways you can depreciate your equipment, but I'm going to go over 2 of the most common methods that are especially relevant for photographers. The first one is straight line depreciation, and the second one is Section 179 deduction. Let's first talk about straight line depreciation. This is the simplest method. With straight line depreciation, you take the cost of your equipment and divide it evenly over its useful life. The IRS typically considers the useful life of camera gear and computers to be 5 years. So with that example we said earlier, if you bought a camera for $2,000, you divide that by 5 years, which means you can deduct $400 per year as depreciation. Pretty simple, right? Now, on the other hand, you could also deduct all of that expense up front, which is where Section 179 comes in. Under Section 179, you can deduct the entire cost of qualifying equipment in the year you buy it rather than spreading it out over several years. This is a great option if you've invested in a lot of gear in a single year and you want to lower your tax bill right away. So for that previous example of buying that camera for $2,000, instead of only taking out $400 every year for 5 years, you can deduct the full $2,000 in the year you bought it instead of spreading it out. Just a reminder, you can only do this in the year you made the purchase of that piece of equipment. So, how do you actually depreciate your equipment throughout the year? Most accounting software, like QuickBooks, makes this really easy. You'll want to keep detailed records of every piece of equipment you purchase, and this includes things like the date you bought it, how much you paid, what kind of asset it is, and which type of depreciation you choose to do. You can input this information if you have an accounting software into it, and it will automatically calculate the depreciation for you. You can also, on the other hand, do this manually with a spreadsheet. Just make sure you keep all of those details in the spreadsheet. And then once you select which way you want to go for your depreciation method, you want to make that calculation within that spreadsheet so it can show you how much you should take out each year. With an accounting software, it makes it really easy to track and helps you ensure you don't miss any tax deductions. But like I mentioned, you can surely do this manually as well. Now, there is one important thing to note. Depreciation can be a little tricky, especially if you're trying to decide between straight line depreciation, Section 179, or other depreciation methods that I didn't even mention. That's why it's always a good idea to consult with a CPA or tax professional. I highly recommend having a CPA close to your business for other reasons, but this is a major one as well. They'll help you figure out the best strategy for your business and ensure that you're taking full advantage of any deductions you're entitled to. So I hope this video helped clear up some of the mystery around depreciation. If you found this video helpful, be sure to like and subscribe for more tips on managing your photography business finances. And if you have any questions, feel free to drop them below in the comments. I'd love to help out. And don't forget to sign up for my free masterclass, Maximizing Your Tax Deductions as a Photographer, so you can gain a clearer understanding of how to optimize your tax strategy and feel more confident about managing your finances. Thank you again so much for joining me this week, and I can't wait to see you in the next one. Bye, guys.